All righty, good evening, everybody, and thank you for logging on. Welcome to our LLC versus LLP Business Structure, hosted by Ms. Verlene McClaney, who is the counselor of the Suffolk County Community College Entrepreneurial Assistance Center. My name is Jennifer Kenny. I'm a project coordinator with the center. I'm the one you get most of your emails from and phone calls. During this presentation, we will have the chat and the Q&A open for any questions. It's very interactive. If you do have any questions, we'll try and help you real time. Just want to let you know, Ms. Verlene is not a lawyer. This is just to give you basic information. This is not suggestions. So we do always tell you seek legal counsel before you move forward with registering your business. I will be active in the chat. I will have our email and our phone number in the chat. Otherwise, you can reach out, and Ms. Verlene, you may begin.
Okay, thank you so much, Jennifer. I just want to first thank all of our participants this evening for spending some time with us and just gathering to know more about business structures, specifically the LLC versus the LLP this evening. All right, so we'll just get started. So regarding the topics today in our agenda, we'll start off with talking about the business structure. What is a business structure? Why do you even need it? And then we'll start to talk about just really comparing an LLC with an LLP. And with those comparisons, we'll be looking at the management structures. We'll be looking at the protection you would have or not have. We would look also at the tax benefits of either one of these business structures. And then last, we'll wrap it up with some factors to consider when you're actually trying to choose the best structure for yourself and your business. Okay, just as a little bit of introduction again, I am one of the business consultants at the Comprehensive, one of the business consultants at EAC, and I just welcome you all to the presentation tonight. So before setting up your business, you do need to understand and have a good understanding about the full implications of what business structure you will choose before registering your business and sitting down perhaps with an attorney and or your accountant. That's probably the best way, and a business consultant, to figure out what's best for your particular business structure. This webinar, again, is only informational purposes. This is not legal or tax advice. Please consult a business attorney or your accountant to get the best solution for your business. Okay, now selecting a business structure. It's a very, very important step in considering when you're starting a business. You're usually really excited. You don't know where to go, how to start, but you do need to figure out, how am I going to protect myself? How am I going to protect my assets? What kind of taxes will I be paying with this business? Will it go through my personal income taxes? Do I have to file taxes separately? Do I have to pay double taxes? So all of these questions we'll answer tonight in the webinar. So a lot of the consideration that we're looking at is essentially the key components of your business plan is knowing like how it will be affected by this selection of your business structure. There are 5 popular structure types that we'll be discussing this evening, specifically honing in on comparing the LLC with the LLP. So the limited liability company with the limited liability partnership. So learning more about each will definitely help you to make those decisions. So let's go back. What is a business structure? Again, it's a legal representation of your organization. It defines who owns this business and how profits will be distributed. And this is very, very important because, of course, you're hoping to be making a lot of money, a lot of profits. You need to know where this money is going, how much taxes are being paid on this money, and again, who owns the business. So you want to definitely think about how this business might grow in the future when you're selecting a business structure. So for example, if you want to change to another business structure in the future, it could be very restrictive if you chose one over the other. And certainly it could be costly because now you have to redo all the paperwork, the filing, etc., and it could become very, very costly. So we want to think this out very carefully before we choose and select the best business structure for your business. It's important to, again, to understand these differences. We'll do a quick video of just kind of summarizing some of the informal versus formal business structures, and then we'll dig a little bit deeper after the slide. So let's just listen in on the business structure and choosing the business structure.
Choosing a business structure is an important first step when starting a business. Each business structure has advantages and disadvantages. So which business structure should you choose? In this video, we will go over each of the business structures and give you an approach for how to decide on the business structure right for you. Keep in mind, this is not business advice, but a means to help you explore the different business structures and help you decide which is right for you. If you are still unsure what business structure to choose, consult with an accountant. The first thing we need to talk about are informal versus formal business structures. Informal business structures are sole proprietorships and general partnerships. Informal business structures are simple to form and thus are a great way for testing a business in a low-risk environment. They allow you to see if a business will be successful before committing too much time and effort in creating a formal business structure. Informal business structures are also great if most of your starting clients are people you are familiar with. However, informal business structures do not have asset protection. What this means is that if someone sues you or you default on a business loan, your house, your car, or your personal savings are at risk. Asset protection is important when you're growing rapidly, have customers you don't know personally, when you're making a significant amount of money, or your business is inherently risky. Formal business structures provide credibility, personal asset protection, and help build business credit. So if you're planning on having customers you aren't familiar with or rapid growth, you'll probably want to choose an LLC or a corporation. As mentioned before, one of the biggest benefits to choosing a formal business structure is the personal asset protection it provides. In addition, formal business structures also add credibility to your business that informal business structures don't provide. Your two options for formal business structures are corporations and LLCs. Corporations tend to be more complex business structures, and generally speaking, aren't what you want as a starting business structure. Corporations also have double taxation, which means that your profits are taxed twice. Corporations are great if you're looking to raise money for venture capital or looking to list on the stock exchange. Corporations are also able to more efficiently carry money over between tax years to reinvest into the company. If you need money from professional investors or are looking to carry money over more efficiently between tax years, a corporation is the better choice. LLCs are a much simpler business structure, have a lot less paperwork, and are easier to start and maintain. They have pass-through taxation, which means your profits are only taxed once, and they have all the benefits of a formal business structure, including personal asset protection and increased credibility of business. In general, it's more beneficial to start as an LLC when starting a small business due to the simplicity and the pass-through taxation. You can always change your business structure and tax classification at a later date. If you've decided that you need asset protection and that the simplicity and flexibility of a limited liability company suits your needs, that might be all you need to do. You will have a strong, formal business structure in place, registered with your state and the federal government, and you'll be free to go on and make a profit. A business structure is different than a tax.
Okay, go back a little bit. All right, so we're just wrapping up the videos at the end though. Just want to talk a little bit again. It's so many choices to make, whether you want informal versus formal businesses, whether you want a lot of protection, whether you're in a low risk business or high risk business. These are some of the discussions you will have with your attorney and or your accountant prior to selecting the best business structure for yourself. So the types of structure that you choose from can affect several factors. And this is really why you do want to sit down with a professional to come to a conclusion. So one, it's going to affect your day-to-day operations. Like who's making the decisions? Where is the money going? Where's the profits going? Second, how much you pay in taxes, which again, we did here with the video, you might be taxed double in certain business structures, or you might have a pass-through tax where, again, it passes through your personal taxes and you're not double taxed. The amount of paperwork required. So that's a big deal, right? So do you want simplicity, an easy way to start a business and have protection? There's definitely some options there for you. And the risk of personal liability. Certainly, there are so many different lawsuits that are out there, whether you have a restaurant, whether you own a business, selling anything, someone could come up with a reason why they want to sue you or your business. So personal liability is a big item there. The risk and the exposure you will have if someone does sue you, they'll go after your personal assets. All right, that's your bank accounts, your retirement accounts, your home, your cars, etc., not just your business wealth. And then lastly, the ability to raise capital. As we could hear in the little video there, that if you're looking to grow your business and raise capital, there's certainly some benefits in being involved in a formal business structure as opposed to an informal business structure. So now let's look at some of the examples that they shared in the video. Now, the 5 most popular business structures that are there, that are available to you to choose from, is 1, the sole proprietorship, 2, a partnership, 3, a corporation, 4, an S corporation, and then 5, a combination of limited liability company and a limited liability partnership. And of course, with each one of these particular business structures, there's some positives and negatives, right? Some pros and cons we have to look at and weigh. So now let's look at informal versus formal businesses. And I think this is really important to take a step back and kind of evaluate which end of the spectrum would your business fall into. So now, if you have a smaller business, low risk business, that would be an informal business. So a sample of those 2 businesses would be the sole proprietorship, or if you're doing business as, or a partnership. So there's very, very low risk in this business. You're very familiar sometimes with your customers, and there's no asset protection there, and you're comfortable with that, no asset protection. The second type of business structure, again, the informal versus the formal, would be the formal business structure. And there, when you're investing and you have a business that is high risk or medium to high risk in getting involved in this business, if they have large growth potential, and in these companies, a lot of times, since they're so big, you don't really know your customers. You're not familiar with who your customers are. And if, most importantly, you're trying to protect your assets from any liabilities or any lawsuits, you would want to have a formal structure. To build credibility with your business, you also would want to have a formal versus an informal business structure. And then lastly, the raising capital. If you want to raise capital, you really would have a challenge with a sole proprietorship and a partnership, whereas with corporations, S corps, and LLCs and LLPs, you could very well raise capital in that type of business structure. So just to repeat, formal versus informal, risk versus low risk, and again, asset protection versus no asset protection. All right, the first business structure that we talked about was the sole proprietorship, which is, of course, an informal business structure. In a sole proprietorship, you are the owner, you're the sole owner, you have all the authority over this business. In fact, you make all of the decisions. So if making decisions is something that's important to you, this type of business structure may be attractive. It's an easy startup. So everyone likes an easy path, right? This is definitely an easy path. So it doesn't require you to fill out a lot of forms or pay government fees to get started. In fact, it's very, very simple, and it's very, very cheap or inexpensive. Next is a simple tax reporting as well with a sole proprietorship. So because the business legally is not a separate entity, it's really just you, yourself, your personal income tax returns includes the business expenses and the income. However, there's an added benefit. You can use the business losses to balance out some of the income that you've earned, which could lead to a higher tax return for yourself. So that's definitely a benefit. Next, we have privacy. Sole proprietorships aren't required to file annual reports with the state or federal government. Therefore, this business type won't be subject to the same public disclosure as it might with other structures where you have to disclose things and you have to give annual reports to the state and federal government. Okay, next we have partnership, which is the second informal business structure we'll be talking about this evening. It also is a simple startup process. It really does not take a lot to open up a sole proprietorship or partnership. And in fact, it's very, very easy. Most people can get it done within a day or 2 days, just filing and completing some paperwork, and it's done. It doesn't require the paperwork, though, to go to federal government, though you might have to file a few state government forms with the partnership. Few tax forms as well. In a partnership, the business doesn't pay income tax, right? Which means you don't need to file a business tax return. Instead, these profits, again, will pass through the individual's and the partner's personal tax returns. Shared finances, which is another benefit, I would say, to a partnership. So having co-owners to reduce the financial burden in starting a company, because the company partners can actually split these purchases and the overhead costs associated with doing business. Also, bankers may be more likely to offer you loans for financing because you have multi-owners. So they're looking at multi-assets, 2 different credit reports, and again, combining it to be able to give you a better opportunity to get financing. It can also help, of course, at the early stages when you might need financing for your small business. Combined knowledge, another perk, I would say another benefit for having a partnership, right? When you have a business and you're trying to grow this business, perhaps you have some skill set that your business partner doesn't. Maybe you're good with finances, they're good with marketing. Again, the 2 talents complement one another in different areas. You have different expertise, and this is why the combined knowledge is very, very important in a partnership. They can also have different perspectives in making some important decisions on how to run this business. Okay, corporations, and that would be our first formal business structure. Now, what happens there? Liability and protection, right? So you do have protection in this formal type of business structure. So now, hey, Berlene, I was really looking for some protection. And now you're talking about a business structure that might be appealing to one of you. So here, the owners aren't responsible for the corporation's debt. So the personal assets of the owners, like their cars, their house, their saving accounts, have protection. And as an independent entity in this corporation, a corporation can file and even receive lawsuits, but you are not liable for such legal actions. Next, we're talking about business continuity, which is really, really important when you're growing a business, a huge business or a larger business that will expand. Corporation-based ownership on the percentage of stocks that you're actually holding. So whether you have 100% of the stock, 50% of the stock, the majority stockholders, 60%, 70%, it really doesn't matter. The business can run on without any disruption, even if a shareholder leaves or if they sell their shares, the company can still continue. This allows for a more flexibility in transferring ownership, right? Because you have these stock shares in the business corporation. Quick capital, again, another, I would say, positive to owning a corporation, which is a formal business structure. Corporations can raise funds by selling their company stock and offering stock to even their employees as a benefit. This can help the business to support in times of need. So this is, again, we know about the stock market. We know about individual companies such as Apple, Samsung. These are companies on the stock market. And they sell shares, right? This is how they raise capital. They say they'll sell stocks and bonds to individuals who are interested in investing in that business. So you own some type of shares or ownership within that company when you own a stock. Tax exemption. Although owners pay double taxes on the business earnings, corporations can deduct certain benefits they provide for their employees. So those benefits could entail a 401k retirement plan, a profit sharing plan, a Roth IRA, company contributions through a Roth IRA through the 401k as well. It can include your medical and your health insurance. It can include your life insurance or disability insurance, any other insurance within your company. So these are business-related expenses that can be written off or tax exemptions for a company. An S corporation, another formal business structure. So we have a lot of different options when it comes to protection and when it comes to expansion and growing the business as well. So now in an S corp, there are no double taxes. So what does that mean? It means that the business profits and losses pass directly to the shareholders' personal taxes. They will appear on their tax returns. This means that an S corp has one level of federal taxes to pay, and they are not subject to corporate tax rates. Liability protection. Again, this is a shield that you would have if you're in a formal business structure. You do have liability protection. So shareholders in an S corp are not personally responsible for the business's debt and or liability. Sorry about that. Also, too, it's simple to transfer ownership. An S corp is an independent entity, and shareholders can sell their shares without any tax consequences. The business can also continue to run uninterrupted when losing a shareholder. And this is really another perk, right? It just another perk on having an S corp. And the last, which is again, more details in an accounting level where you do want to sit down with an accountant. A lot of this material, a lot of what I'm saying could be, words that it's the first time you're hearing it. But sitting down with your accountant is a sure way to determine the best fit for you. So a cash method of accounting is what we use with the S corporation, although the corporation must use the accrual method. S corps without inventory can use more simple methods, such as the cash method. In the cash accounting, you record your income that you receive and the expenses when the invoice is paid. Now, what we've been kind of waiting to hear more about is the LLC, or limited liability company, and the LLP, the limited liability partnership. And this will give us a detailed comparison of the two forms of business. One thing to know, they have a lot of similarities, but they also have a lot of differences. Okay, let's define what an LLC is, our first step. A limited liability company, as we mentioned. This is a hybrid business structure. Now, what does that mean? It's kind of twofold. It takes advantage of the aspects of a partnership and a corporation. You can set up an LLC by filing paperwork with the Secretary of State in which the state that you want to do business is. This structure is also to pretty good fit for a medium to high risk business. If you want protection of your personal assets, you want to pay lower taxes, this could be a good fit for you, a limited liability company. Now, other advantages, and there are many to having a limited liability company. First, the limited liability, right? As the name suggests, because this company is an independent entity, you are not personally responsible for the debt or any lawsuits against your company. If the business goes bankrupt, your personal assets have protection. No one would go after your personal assets, though you may lose your initial investment in your business. So if you invested $50,000 in your storefront and you go bankrupt, you probably would lose that 50,000, but your rest of your assets, your personal assets are protected. No one could go after those assets. They are protected. Pass-through taxation, okay, rather than paying corporate taxes like a corporation, the company's income and expenses pass directly to the owner's personal tax returns. And this is very, very, it's a positive, right? And they pay income taxes on these profits. Because the owners are considered to be self-employed, so that is myself, I am self-employed, they may claim self-employed tax credits, and they're also too responsible to contribute to Medicare and Social Security. So you do have to pay into those taxes and into those benefits. Now, added share participation, shareholder participation, another benefit. An LLC can have an unlimited number of shareholders. So large companies such as BMW, these are large LLCs, so an unlimited number. And those shareholders can fully participate in company operations. This structure provides more flexibility for management than a corporation would. In most cases, you use a board of directors to kind of oversee the policies of the officers who manage the daily operations. Next, we have flexible distribution of profits. Unlike a corporation, an LLC can decide how to divide its profits among shareholders. Very good advantage. So again, if you want to control that and you want to decide how to divvy up your profits, an LLC could be a good fit for you. For example, a shareholder who contributed significant funding in the startup phase of the process of your business could receive more profits, even if they have equal shares as another participant, right? Because they gave a lot in the beginning, you might want to give them a lot of the profits as well. All right. Now we have LLP, Limited Liability Partnership. Now, what is an LLP, Limited Liability Partnership? It also is a general partnership formed by two or more owners, or we can just call them, of course, partners. And we know exactly what that means. If you have a partner in life, if you have a partner when you're playing a game, your partners, you're kind of like married to each other, right? You're kind of tied to the hip with one another. It is similar to the LLC. It's kind of like a cross between a corporation and a partnership, with the partners enjoying some limited personal liability as well. It is different from an LLC, right? Because we must have managing partners that is kind of liable for the actions within the partnership. As long as a silent partner or investor does not assume any managerial role, they also can receive some liability protection. Now, about 40 states allow for the formation of an LLP, and the laws do vary from state to state. So again, you do want to consult an attorney or an accountant to figure out what state you may live in, and if you can actually form this LLP, Limited Liability Partnership. If your business plans to operate in multiple states, which is something that a lot of companies can do, especially because of the World Wide Web, you can check with your state statutes to ensure that the state recognizes the LLCs or the foreign LLP, which is basically forming an LLC in another state. Okay, and all right. All right, my slide wants to take a little rest. Okay. All right, a little technical difficulty. Let me see what's going on here. Okay, here it is. Now we have the LLC versus the LLP. Excuse me for that. We're going to look at the differences, right? The first difference we want to identify is the management structure. What happens between the two? So there are two common management structures in an LLC, limited liability company. The limited liability members can manage the business themselves. Member management, right? Each share responsibility for running this business. Or you can hire or appoint one or more member or a non-member to manage the business, right? Member management. You may have a team again that run this business, and the remaining members are not involved in making any decision making, just a team or a manager that you appoint to run the business in an LLC. Now, how an LLP operates, limited liability partnership, it operates like a general business partnership where the managing duties are equally divided between the actual managers. A partnership agreement can set the tone and really kind of the roadmap on how, decide the roadmap on how the decisions are going to be made within this organization. So if you have any form of partnership or you're forming a LLP, you should have a business agreement in place to help you with decision making and the process associated with it. Now we're going to talk about the protection differences between an LLC and an LLP. Okay, limited liability protection. Hey, that's good. They are both formal structures, so they both have protection. Both the LLC and the LLP provide members and the partners with a limited liability protection. The LLC members are protected from personal liability for their business debt and claims on it. That means that creditors cannot sue to recover any personal assets if the business cannot pay its debt. They cannot go after your personal assets in an LLC. The member only loses their monetary investment, of course, like we mentioned before, if the company does go out of business. Then we have, if the members commits to any act of illegal actions, both the LLC and its members can be held liable, right? In this case, we have the corporate veil, which protects the members from personal liability, though. Then we have the LLP. Let's look at the difference there when it comes to protection. Limited liability protection, each partner in an LLP is personally liable only for their own negligence. So if you're my business partner and we're an LLP, I am responsible for my own personal negligence, not yours. Partners are not liable for one another's mistakes and only risk capital investments in an LLC. In some states, partners in an LLP can be personally liable for their partner's debt. Important to check your state and the state statutes. And this is constantly changing and evolving. Again, why you want to sit down with a personal tax advisor and or an attorney. Now, the tax benefits. Some people are really very, very interested in taxes, how it's going to affect them, and of course, how the IRS is paid or not paid. How is your income going to pass through the business? Is it going to pass through on your personal taxes? You know, these questions are certainly one-on-ones with your accountant, and this is a really good time. Tax season is right here approaching us. In the next couple of months, we will be getting all types of forms for our taxes. And if you had not already established a business structure, it'd be a great time to sit down with your accountant who's putting together your taxes, because again, some of these corporations will pass through your personal taxes, so it will be added income to your personal income if you're still keeping your job initially when opening the business. Okay, so we have the LLC and the LLPs are not recognized, remember, as business entities by the IRS. And they do not pay income taxes, right? I'm talking about to the IRS on the business income. Each is required to file an informational tax return. Unless the LLC elects to file a corporate tax return, it's treated like a partnership, basically. In a partnership, the business earnings are passing through the partners who report the profits and losses on their personal federal income taxes. So again, if I have some business, I'm in business rather, and I'm making $100,000 in this business, and I have about $60,000 in expenses, that $40,000 will be reported on my personal income taxes. Now, with an LLC, you do avoid double taxes, so you're not paying taxes to the government, corporate taxes on your earnings, and then you're also paying income taxes on the same earnings by filing as a partnership. While one-person LLC is just like a sole proprietorship, and the members must file self-employed taxes. And again, your accountant will let you know what that means to you. Some states don't allow pass-through taxation and impose a state franchise tax on your LLP. Now, we want to briefly talk about some factors that you still need to consider when selecting a business structure.
Ms. Verlene, we do have a quick question.
Oh, question, sure.
It says, can you transfer your LLC into a family trust?
Now, that is a very good question. It is definitely one that you want to sit down with your attorney to actually go through the pros and cons of doing so. And you could, in fact, do so, but it may be some drawbacks to doing to making that transfer. So you do want to sit down with an attorney to really kind of get the pros and cons before trying to do such a thing. Just as you have a corporation and you might want to change the structure of it, you can do the same with your LLC. But there are going to be drawbacks, and of course, it may cost more and it may not make sense as well. Thank you for that question. All right, and then I want to just okay. So now some of the factors that we want to consider when we're selecting a business structure that's appropriate for your corporation. So control, as I mentioned before, do you want to have primary control? Are you okay with the flexibility of not controlling everything? If you want primary control, consider a sole proprietorship or the LLC with perhaps one member. Partnerships bring in others, right? But, again, the control can be explained clearly in a business partnership agreement. And the corporation may require a board of directors to approve that, but certainly if you're looking for control, a sole proprietorship where you make all the decisions may be appropriate for you, but it doesn't have the protection, so that's where the LLC might be beneficial. Capital investments. So corporations can source funding, right? So such as investors, bank loans, or by selling stocks or securing more funding. So if you're looking for funding, and again, a large formal business structure could be more adequate for you, an LLC may be difficult really for you to raise capital, but having a corporation will give you the ability to do so. And also, as we mentioned, give you credibility as well within that business structure. Now, flexibility, another thing to consider. Do I want a lot of flexibility? Try to review what your goals are and the business plan. And this brings me to the next topic briefly. As a business consultant at Suffolk County Community College Entrepreneur Program, this is one of the things that we do with either the 60-hour course or technical assistance. We sit down with business owners who are just trying to figure it out, maybe just have an idea, haven't gotten to the step where they actually form the business yet. So we help them with their goals and objectives, their vision plan, their mission statement. We help them to look at their target audience, their target market. We help them to kind of dissect a SWOT analysis. What are some of their strengths, their weaknesses, opportunities, and threats that exist for this corporation or this business? So writing the business plan is really another roadmap to success. Besides knowing more and speaking to an accountant or an attorney about the business structure, definitely the business plan and how you plan to succeed is very, very helpful. So we want to compare each of these structures and align them with your plans as well. So you might have plans to expand, to become a franchise, or you might want to stay very, very small, and that's fine too. The structure should support the growth and change, right? It should not limit your potential. So if you go ahead and you start a sole proprietorship, but you really want to expand, you want to raise capital, that might have been the wrong business structure because you already know your goals in 1 year or in 2 year. We want to start to expand and raise capital. It may be very challenging for you to raise capital in certain business structures, and certainly if it's an informal business. Complexity. Sole proprietorships, again, is the simplest business structure. Not a lot of protection or basically no protection in terms of personal assets, but it's very, very simple. A lot of companies start there and then go on later to transfer or change the business structure to an LLC or an LLP. But for the most part, I would definitely tell you that sole proprietorships have a lot of exposure and to risk, where lawsuits and being sued is really a big deal. So it is simple, but it may take you, some work finding out and then getting funding. Very, very challenging for sole proprietorship. Partnership requires signed agreements on the different roles, on what's supposed to happen with this profit, who does it go to, what percentage goes to me, the partners, the investors. While corporations and LLC must report to the state and federal government. Limited liability again. I think we have another question in the chat. I'm sorry.
Yes.
Okay.
It says if a husband and wife are an LLP but file married joint, how does that work? It may be a tax pro question, but if you have any information that may help.
Yes, no problem. So that also too will pass through your personal tax returns that are joint taxes. It will pass through the joint taxes. So you'll have your husband's or your significant other's taxes, what they have on their W-2, you have your W-2, and then you'll have what that LLP or that LLC actually had in income as well. It'll go right through. It'll pass through those taxes. Very good question. Thank you. Is there another question? Oh, I'm sorry. I see another one in the chat. Or is that the same one?
No, that was a thank you. We do have a question in the Q&A. Once
Oh.
establishing an LLC business and renting a property, what would you need to make your business successful? Do you need insurance? Do you need a CO certificate?
Okay, very good question. When we say success, when we say, are we talking about protection right now, or are we talking about financial success? I just want to make sure I understand that question. It is better to yes.
I believe that's a typo. Yes,
So
I believe
yes.
financial.
So financially, okay. So the question again, I'm sorry. Once establishing a limited liability company and renting a property. So you want to become a real estate investor where you're renting property and you're protecting yourself and your personal assets with a limited liability company. Okay. What would you need to make your business successful? Do you need insurance? Do you need a CO certificate? So one thing I would definitely tell you, you do need insurance. You do need to sit down with an insurance agent for the liability protection that's on your home, your homeowner's insurance or your business or corporate insurance for that property. It needs to be titled the right way. It needs to have the right protection because you yourself are not owning and occupying it. You are renting it to a business or you're renting it to another individual. So there's a lot of protection you want to have in that particular case. And do you need a CO certificate, a certificate of occupancy? You do need that as well if you're looking to have several properties. And I think that's what you're probably trying to establish. You would as well. Thank you for that question. Okay, and then we have another one in the chat, or is that the same one?
Same one.
Okay, perfect. All right. So liability. So where were we? We're talking about what some other factors to consider when we're establishing the business structure. And the next one is a corporation has at least the least amount of limited liability or liability because creditors and or the customers can sue, right, the corporation, but don't have access to your personal assets. So with that LLC, we'll use the example of the real estate. If someone fell and were hurt in your real estate, and this happened to me, unfortunately, with my real estate LLC, people can go after you or attempt to sue you, but they can only basically go after the asset in the LLC, not the personal assets. They cannot go after your bank accounts, your home, and such, just the LLC and what it may own. So among other structures, an LLC has the same protection and tax benefits as a partnership, and they share in liability between the partners and the sole proprietor who carries on the financial liability by themselves, really. As far as taxes, again, sole proprietorship and LLC owners pay personal taxes, while partnerships claim their share of the partnership of the profits on their personal taxes. So the example or the question about the couple that might have a partnership is going to go through your personal taxes as well. And if, you know, a wife is 60% owner and the husband is 40%, those incomes will, or those profits will pass through the personal taxes as well. Corporations file their own taxes and their own tax returns. So in paying taxes on the profits, so again, that's a corporation with a double tax you have to pay with a corporation. But they also have more tax options and exemptions. So although you're being double taxed in a corporation, you have some, you know, deductions, some exemptions, because you may offer benefits. You may offer yourself a single 401k, which is another financial instrument that you can use for small business. You can have a 401k just like a large corporation, and put away $23,000 and some if you're older. So that you don't want to be discouraged if you're going into your own business. And with your LLC or LLP, you can do the same thing. You also can open up a simple IRA. You can open up just a simple IRA and then an IRA, not a simple IRA, or a Roth IRA to kind of put monies aside with the business. But you need medical insurance as well. So if you're offering that as a benefit, that is a tax exemption. So that's also to a plus. So if you're looking for tax exemptions, the corporation may be a structure that works best for you on that side. Double taxes, but then you get a chance to write off some. So again, pros and cons. Certainly, you do want to sit with your tax professional. And again, this is a great time before they get very busy. You can let them know you have a business or you're looking to start a business. You want to know what business structure is going to be appropriate. Have your business plan already ready before you speak to the accountant, because they're going to want to know, what is my vision? You know, again, are you looking to grow this business? Do you want it to become a franchise? Are you going to have a location in New York, the tri-state? Are you going to have it also too in Florida? Like, what are you looking to accomplish? So they can tell you the pros and cons, and then look into, especially if it's an LLC or an LLP, look in if that state requires it or allows it. Because again, over 40 states do allow the LLPs and some states do not. Okay, let's see if my slide wants to work for me. Oh, I think we have another question.
If there were multiple sole proprietor companies established, then an LLP was established, how do we absorb the other companies and operate as a DBA?
This is definitely an accountant and or an attorney question. So I would tell you, Mr. Lloyd, to direct that to your accountant and attorney, because it's a little bit involved. The part with the sole proprietorship, if you have multiple sole proprietorships, remember that's just personal. It's not really a corporation. It's not a separate entity. If you have the sole proprietorship, and a lot of companies do that, they start off as a sole prop, and then they go into an LLP or an LLC. That's again pretty simple. The part about, you know, absorbing it, that's where you want to speak to the attorney, and you also want to speak to your accountant to see if that is going to be suitable for you.
Next question is, what should I look out for in terms of avoiding piercing my veil?
Okay, good question. So piercing the veil and having that veil, that protection for your personal property, is deciding of these structures are going to be best for you and suitable for you. In most cases, it's going to be a structure as opposed to the informal that leaves you so exposed. So proprietorship, a DBA, you know, those forms would be definitely informal and would kind of leave you exposed to a lot of liability. We meet with clients in the center, and sometimes they may have, you know, they may be selling food from home or trying to do like a home business, like a restaurant, leaving yourself so exposed because that, again, you can't sell food from home, first of all. But people do it. If someone eats your food and gets sick, you're in a lot of trouble because personally, again, you can go after all of an individual's personal assets because there's no protection there. So you'd want to have most protection or a formal business structure if possible. Thank you.
How much income monthly is the minimum to do an LLC or LLP?
There's no minimum, really. There's no minimum. A lot of times businesses are, small businesses start and you may have no income initially for a while. You may just not even have any profits. So in most cases, small businesses, maybe the first 5 years, they don't even see profits. So you might have $50,000 worth of expenses per se. Well, make it even lower. If you have $25,000 worth of expenses and you may have made, $30,000 if you have a small amount of money that you've actually cleared, or you may have $25,000 worth of expenses. And, again, with that, you made only 20,000, right? So you're, in the hole there. So there's no minimums at all. And you can write off those expenses if needed, certainly within your taxes. And if you have an LLC or LLP, that's going through your personal taxes so that it may even give you a refund, right? Because you have write-offs. So that could be a positive for you, depending on your situation, of course. Thank you for that question. And do we have another question in the chat?
This
That
time.
one question is
That one question keeps getting you.
that one question doesn't want to go away. All right, I want to do a recap, but this is going to be another video, so I'm going to just take a little bit of time after the video is over. We'll definitely have some more questions, but let me just see if this will come on and the technology will just do its thing here. Okay, it's loading, I think. Okay.
LLC versus LLP. Key differences between the two business structures. Limited liability companies and limited liability partnerships stand as prevalent legal designations for small enterprises. Despite their apparent resemblance, these classifications possess significant distinctions. Selecting the appropriate option is paramount during the company's establishment, considering legal, tax, and managerial considerations. Comprehending the disparities between LLCs and LLP and determining the optimal structure aligned with the requirement is essential. When venturing into the business world, choosing the right business structure is crucial. LLP and LLC are among the preferred choice for many due to the protection they offer to owners. Delving deeper into these structures can provide.
No, we can hear it, but we can't see it.
Definition of an LLC
Let me
is a
share again,
blend of
sorry.
a partnership and a corporation, offering flexibility and protection. The primary benefits are asset safeguard, which means
Okay,
shields
hold on.
personal assets from business-related liabilities, taxation variety, which provides several tax
Oh, it's
options,
not coming on.
and ownership options, which could be formed within a single member or multiple members. Owners and governments, however, are known as members. The
How about now?
operation are primarily determined by an operating agreement. The
Still
definition
no,
of
I can hear it, but I can't
partnership
see it.
structure that caters primarily to
It
licensed
shows that you
offering
stopped
the degree of
sharing.
liability protection. The distinction features are
Okay,
liability
stop
shield, which
sharing.
provides partners protection against liabilities created by other partners, mandatory partnership, which must consist of at least two
Hold on.
partners to be formed, ownership and operation, which owners are termed partners, and the partnership agreement generally determines the operation. The formation and operation of LLPs are
Okay, let's see.
influenced by state regulation.
How about now?
States like California, Nevada, and New York restrict
Yes.
LLP formation to specific professions such as lawyers and accountants. State-to-state recognition is vital to note that some of these states might not recognize LLPs formed in other states. LLC versus LLP, a comparative analysis. Features of LLC is the ownership designation, which members represent ownership, the protection from liability, which members are safeguarded up to their investment in the business, management structure, which can opt between member management or managed setups, tax implication, which multiple tax options include sole proprietorship and corporation. LLP features ownership designation means the partnership is represented by partners. Protection from liability means protection level varies based on state regulations. Management structure means typically determined by the partnership agreement, and tax implication means primarily functions with partnership-based taxation. Advantages of LLC is personal asset protection, flexible taxation, and no minimum requirements. Advantages of LLP is safety from other partners' malpractice and simplified formation process.
The drawbacks of LLCs: potential annual fees and profession-based restriction in certain states. And the drawbacks of LLP is limited recognition across states and possible for professional-based constraints. Frequently addressed queries. What are the common pitfalls associated with LLPs? Limited geographical recognition, professional-based restriction in specific regions, cannot adopt S corporation tax structure, minimum requirement of 2 partners, including a potential managing partner. How to embark on an LLC formation journey? Commence by accessing the State of Secretary of State's portal, trickle down to the business division and unearth the LLC application form, fill in the necessary details and opt to submit either digitally or through traditional mail. What's the drill for LLP inception? Various state guidelines for precise detail. The Small Business Administration site is a recommended start. Cost implication of an LLC BAZ business. Financial commitment span for a complimentary $349 annually, sans the state imposed fees. Dive into the world of LLCs. How varied can they be? Solo endeavor with a single member LLC, collaboration with multi-member LLCs, expand horizon with a foreign LLC, build an empire with a serious LLC, merge profit and purpose with a low profit LLC, start moving anonymous LLC, family-focused asset transfer through a restricted LLC, and regulatory board-focused professional LLC. Choosing between LLP and LLC is not a mere toss of a coin. Each structure offers its bouquet of advantages wrapped with certain constraints. An astute entrepreneur should not only rely on surface knowledge but also seek expert counsel from legal and tax mavericks before cementing their decision.
Okay, sorry that you didn't get a chance to see half of it, but he was definitely giving you a lot of information. I'm going to stop sharing and I'll go back into the slideshow right now. Sorry about that. And as you can see, there's a lot to choose from, a lot of decisions to be made. Forming an LLC or an LLP is relatively easy and simple as filing some papers, really. You always want to check with an attorney and get some guidance, and even your accountant, to get the guidance that you need to make the last determination or the final determination on which way to go and what's best for you. Check your state. Again, from state to state, there's different limitations. These change all the time as far as who allows what, as far as LLPs or LLCs, and check to see if your legal entity can be operated in your state before you go through the whole process, pay all the money, and you find out that your LLP or LLCs cannot be operated in the state. Again, they have a lot of similarities, the LLC, limited liability company, and the limited liability partnership. They share a lot in common, but they're also, as we can see, there's a lot of differences. And in choosing what works best for you, you do need to kind of weigh all the odds, and then I'm pretty sure you'll make a great decision to walk down the right course of action with your rallying around some trained professionals to help you with the questions that you may have. And I think we have another question in the chat.
Yes, we do. How much money can you deduct for lose
For losses?
lost money each tax year?
Okay, so that's a good question. That changes every year. Don't know for 2024 off the top of my head. Most cases, sometimes you can deduct I think it's $3,000 to $5,000, and you can carry over more of the losses, but I'm not sure. I just would ask you to check with your tax professional for that. I don't want to give tax advice. I'm so sorry on that one. Okay, I think do we have other maybe questions on the other chat?
Not yet.
Okay, all right. Okay, no problem. Well, I just wanted to go to the last slide and just thank everyone really for, coming on board today and spending this last hour with us, just knowing more and more about the LLC and LLP. We will be looking to do another workshop or webinar. I think is it April or May, about the trends? I forget what month we're going to be doing that one. The
I
trends for
believe
small
it is
businesses?
in April,
Oh,
but
April.
next week we will have a webinar discussing tax breaks for small businesses next Thursday.
Oh, okay. So there you have it. We do have an accountant that will be on board. Is that going to be the accountant going to be helping us with that one?
Yes.
Okay. So come again next week, because you'll have all your tax questions answered, because you'll have a trained tax professional that help us in guiding you with some answers and solutions for your tax questions for your business.
I did again put our contact information in the chat in case anybody missed it. You can call, email anytime. If you have a question, I definitely say email me, or you can always call and leave a voicemail if we are not in office. And I will get back to you.
And this is our website and YouTube, Instagram, Facebook, Twitter. Follow and like us anytime. And thank you for your time again this evening.
Thank you, everybody. And I hope you all have a wonderful evening, and stay warm in this chilly weather.
Well, maybe everybody's not chilly, but it depends on where everybody's at.
Correct, correct.
All right. Well, we're chilly up here in New York, that's for sure. All right. Have a good night.